Alrighty. Saturday, September, what are we, 19? How are we doing, Luke?
Good, mate. Good. How's things?
Yeah, not bad. It was, I can't remember much other than one topic.
Sorry, mate. Well, I think the most interesting thing that's happened, and we talked about it briefly yesterday, was all the shit that's been happening with Uniswap. So,
I can't remember anything else happening this week other than that.
It's been a few bits and pieces, but we'll pull it up. So I guess the main thing, I guess you can get on your screen if you've got it free.
I can't. My crash.
Okay, I'll bring it up then. Give me a sec.
My uni tokens are going towards a new laptop.
Oh, mate, you already sold, mate. You should have held on for the long term.
So I sold half of them. That's probably the unpopular opinion on that, but I kept half of them as well.
Well, it's an interesting one. I mean, I think price discovery initially was a bit low. So when we first saw Uniswap list, it listed at about $2. Then it got down to like $1.80 when I was watching it, and that for a price discovery for something like Uniswap is low. I mean, that's an incredibly cheap. That's an incredibly cheap price for one of literally probably one of the top 3 exchanges now globally. When you compare it to something like Binance, Coinbase, I mean, it did more volume than Coinbase. I'm not sure how it stacked up against Binance, but I'm pretty sure it would have been reasonable. And it's it's more accessible, no KYC. I mean, it is limited to the Ethereum blockchain, but that's where everything is anyway. So, I mean, it is pretty much the biggest project out there, and it's obviously significantly bigger than Uniswap. So and obviously the token is going to have some utility, which at the moment, I think initially it's only governance, but once they start allowing people to vote on stuff, I mean, you could end up with a token that will look similar to SushiSwap, where a certain amount of profits are paid out to token holders as an incentive to hold tokens long term. So I mean, it's pretty interesting how that's meant to work. But I mean, for the lows that I was seeing, or maybe it was $2.80, not $1.80. But I mean, what you were seeing when it first listed was just these 400 uni sell orders, 400 uni, 400 uni, 400 uni, and then there would just be an absolute truck thrown at the buy side, and someone will just go out and spend, a couple of hundred ETH or 50, 60, 70 ETH in a go to then buy up all those sold Uniswap tokens. So obviously there are some fairly big fish on the sidelines that want to have a piece of this. And also, I mean, it wasn't a bad strategic move, especially after all the SushiSwap drama. It pretty much wasn't a bad idea to pretty much crystallize liquidity. Any liquidity that was going to move over to SushiSwap, I promise you, whether the yield is going to be better or not is going to depend on where this price discovery ends. But farmers will be wanting, or yield farmers will probably get more out of farming Unis tokens at the prices they're at than they would with Sushi. And it's more stable. I mean, you haven't got any drama associated with it. So if you're just doing straight yield farming, you're not worried about the dividend side of it. It's actually a better place to farm liquidity, and that value to the token is less relevant to a yield farmer, because I mean, essentially you're going to be getting more fees because you get the 0.3 as opposed to the 0.25. But yeah, it's going to be interesting to see how the whole thing develops. But I think that was mainly what I was talking about. Was there anything else, Peter, that you wanted to?
No, I mean, don't you think this is just the start, basically, of the battle of the dexes kind of thing, right? So, I mean, SushiSwap was obviously trying to take liquidity from Uniswap, and successfully did so, with this whole vampire liquidity mining thing. And then you see Uniswap, I mean, the timing is timing seems to be, just immediately after, Sushi has ordered Strong, they strategically come out with their token. And it seems like, it's all a bit strategically planned. And, I wouldn't be surprised if Sushi comes back with something.
There are the conspiracy theories out there that the whole thing was all planned between various people. I mean, I don't see it being that way. I think that there was too much randomness, and I mean, the creation of UNI Sushi Swap is basically just copying the code, pivoting, slightly changing the model, and pushing tokens. I mean, anybody could have seen the success of basically what had happened with Uniswap, and then add on the addition to yield farming and stuff like that to the product. I mean, add on the addition of a token to the product, and it's a bit of a no-brainer. So, I mean, I think that eventually someone would have, if it wasn't Sushi Swap, it would have been someone else coming up with an equivalent idea of just adding a token to Uniswap and basically just forking the code. So, I mean, that was eventually going to happen. As far as the drama, as we all know, Nomi Chef has returned the money, and and that sort of makes the plot a bit thicker. I mean, did he feel guilty? Was he worried about being doxxed? Was he actually doxxed? And it turns out it was the guy from Ban Protocol. I mean, I still don't think that it was. So there's all these other things to it that it could be. But I mean, I don't think this was I don't think this whole saga of what's been happening with these dexes and these liquidity providing dexes is by any means planned. I think it's all just been very, very interesting. What's going to be interesting though is to see what ends up happening to the price of Uni token.
So, with the whole DeFi space kind of heating up with basically yield farming, right? I'm sure Uni's been thinking about running their own token for some time. And what I was quite interested is I thought the timing is not that. I mean, I think it's quite not coincidental, but I think it's probably planned. I mean, it's a very good time to be launching a token. It's basically hitting it prime in the middle of when everyone is looking for interesting tokens, and especially look at the market right now. Everything is down except for Uni, pretty much. And it's quite an interesting.
I mean, Ethereum's going on a little run at the moment. Bitcoin's up at the moment. Really? Yeah, they've both gone. I'll go and grab my chart. It's one of these ones.
Yesterday, most things were in the red, and Uni was pretty much the only coins.
At the time. I mean, everybody is calling this. A lot of technical analysis people are calling this. This expectation that the market's going to go down to 9,600. And personally speaking, I don't believe that. I don't reckon that's going to be a thing. I personally don't think that we're going to end up in a situation. I mean, the one thing I've learned from crypto is that when everybody thinks something's going to happen, that one thing doesn't happen.
Yes.
I can tell you now, when Bitcoin was when the market was at, when we had that first run down in, January 2018, everyone was like, oh, we're still so early, blah, blah, blah. This is just the first run. There's so many other people yet to come in. I mean, the same arguments that people make about DeFi today. So read into that what you want. But I think that at the moment you've got this situation. Well, back then you had this thing where everybody just knew that the market was going to do one thing or the other, and everybody had this consensus that it's going to bounce here, and then it's going to go to $1 million. Bitcoin's going to go to back to 30 grand. There were all these things where everybody knew what was going to happen, and there was consensus. But the market, I've never seen crypto do that. And so at the moment, and I think we had this chat, when the market had a bit of a dip. So many, and I think I said this on this when we did this a few weeks ago, is that there were so many people that, I mean, the whole idea is that when everyone's bearish, it means that they're out and there's all this money sitting on the sideline and they've already sold. So people who are bearish have already sold, then they're out waiting on the sidelines with cash. So they want to see the market drop. But the thing is that if they've already sold, they can't make it drop any further. And if they've got money on the sidelines, the only action they can really do in regards to the market is buy. And so when you have the whole market going like, oh, I think this is going to tank, and they've pulled their money out, and then you'll see that at first initial dip. But if everyone who's prepared to pull their money out has pulled it out and they've started telling everyone, it's all over, I mean, that's generally a good time to look for the bottom to be in. It's sort of like in the same way as once everyone's bought in. I mean, I remember that I think it was there was a tweet that came out where Ian Bellina came out and said, "Oh, who's farming yams?" And then the first comment under the tweet was, "I guess the top's in, guys." It's once everyone's doing it, it's done. So at the moment, I think that because everyone is expecting this drop to 9,600, and if you go onto the various YouTube videos out there that are talking about technical analysis guys, and I mean, technical analysis is right a lot of the time. You don't have, but not 100% of the time. But essentially, there's a lot of people saying that we should be testing 9,600 before we launch off, or it's going to be a bloody September. But I mean, I don't think that the market is so bullish right now. Like, it's not so hot that it needs to cool down again. I mean, you could argue that it was hot last week, or when we sort of started to see pretty much when the sushi swap thing was happening, or just before that, when everything was just going up by huge multiples. I think Diadata had just gotten listed on Binance and was, I think, hitting like $5 or $6. There were just projects just mooning everywhere, and it was just like, wow. And I was doing some yield farming on Harvest and earning, I think at the time, like 360%, like just on USDT plus the tokens, and that adds an additional, let's call it at the time, an additional 80%. So close to quite a significant amount of money there. And so I mean, it was hot and it did cool down and it's had that breakdown, but I don't think that people are, I don't think people in the market at the moment are, I don't think there's any fear. I don't think there's enough fear, and I don't think there's enough greed. I think we're in this middle period at the moment that will probably stay in. I don't think we're going to be seeing, massive runs up anytime soon, but I also don't think we're going to see the market tanking. I think people are, I think enough people that are scared have already pulled their money out, and that's why we're not seeing. That's why the drop, for example, for Bitcoin was what was like 12,500 down to just under 10. But then that was where it sort of stopped. And I think that this is a weekly chart, by the way. But since then, the weekly charts have been quite strong. And we've seen this next run up. Now, I'm not necessarily going to suggest that we're going to be hitting stupid high levels in the next week or two. But also on the same note, in my mind, it's like if everyone's saying it's going to go down to 6,900, 9,600, which is back down here again, I'm just not seeing it. I look at it and I'm like, there's unless there's some other external factor that'll come in and wreck the market, I think there's not enough greed. People aren't that greedy at the moment. Maybe hopeful is a good idea, but not greedy. And I don't think that there's on the same note that's not going to push it up. I don't think people are completely bearish. So I think that we're still in this middle period. But I will also go back and say that I think that at the moment there's just the market that we're operating in is just too small to not grow. You know what I mean? Like, total assets under value on DeFi Pulse is, I think it's back to like 8 billion. It did top out at 9.5. And so it's still kind of small.
So I've got a question for you, right? And that's not investment advice, and we're not treating it as an investment advice, but when the market was getting euphoric,
we're back to 9.5. So hey,
when the market starts to get euphoric, and like the project listings happening all the time, and you're seeing crazy multiples. What's your strategy? Do you start to cut some of those profits at the top and make sure you've got something to buy back in the future? Again, not investment advice, but
you never want to be fully allocated. And I've done that many times. And I keep doing it, but we won't get into that. But essentially, you never want to get fully allocated, which is something that I've done in the past and I've done a few times. But Thankfully, it's worked out, but I wouldn't recommend people do it. Never get fully allocated. So yes, you should be pulling money out. I mean, like the easiest thing to do, and yet again, not financial advice, but easiest way to manage your money if you just want to have a look at it, if something 10x's, which is not difficult in this market, you've at least got to pull out your initial and then leave the market with that and put it back into your bank account, and then pull out multiples. Every additional multiple, pull out 10%. So, for example, at 11x, you pull out 10%, 12x, and then you use that as like a payday, and that is your cash to then buy into other things. And it also means you're taking enough money off the table. You're not taking off all your capital off the table. You're taking little bits and pieces every single time at multiples. Doing that, you'll eventually diminish, obviously, significant amounts of your position over time. But for every one coin that sort of goes to that magical 100x or 1000x or whatever, there's sort of 900 other coins that don't make it there. So it's far better to play the averages and not get greedy and just buy it $1 and hope that it's going to sell at 100. Also remember, and I've learned this the hard way, especially in this market, is that especially in these micro cap coins, if you say buy $1,000 of something and then it goes to 100x's and then you've got $100,000 worth, it is far more difficult to sell that $100,000 into this market than it would be to buy the $1,000 because of liquidity. So even though these markets jump up, I mean, selling 100 grand into these markets at the moment, you could dunk the price by 10% just by dumping. And there's a few of these micro projects at the moment where if you own a large percentage, because you've held on or because you've been lucky or skillful, if you look at it, but then liquidating is far better to liquidate gradually on the way up than to try to hold the whole way and dump at the top, because liquidating at the top gets very difficult. So also remember your liquidity, especially when you become a whale. I mean, whale problems. But I think that would be the one thing I would recommend people do, because it's not. I mean, you're not meant to be. I mean, it's hard not to get greedy when you're making the kind of money that you can make in this market. But it's important to remember that by taking money off the table, you're allowing yourself free capital to look at opportunities. And if you're completely allocated, that's when you can also make dumb decisions, as in selling winners too late or whatever. So it can be a bit nuts.
Yeah, that's true. That's a good point. Yeah, I definitely agree with don't fully allocate yourself, and like capital preservation is actually probably one of the keys, I would say, right? Is that in this market there's so many opportunities to make money, right? So there will always be opportunities, like with new projects coming out all the time, and as most people would say, like we're early days into a bull market, right? So it's not like you need to FOMO into every single project right now, but rather, actually keeping your capital and not riding all the waves down. You can ride the wave up, and then if you don't sell on the way up, then you're going to ride the whole thing all the way back down again, and that's never a fun thing to do, right?
Sorry, I muted myself. Yeah, that's right. And so I think the other thing is all you need to note is that we are early, and that's why, for example, yield farming, for example, the APY that you can earn when you initially get into a new scheme. I mean, there's the risk versus reward there is that you can earn, really, really insane APY values, as in you can earn, a couple of 1,000% when you're early in. However, then obviously, you've also got a fairly reasonable chance that you're going to get rug pulled if the project is unaudited. And that's where I think that once this market again matures, you're going to see a lot more mainstream interest. So once people have trust that, okay, this protocol works, and I think there's an immense amount of trust in, say, Yearn Finance. Like YFI has the most amount of trust. I'd probably say of any yield farming operation, purely because the founder is not doesn't seem like a greedy dude. He's very matter of fact. He's got his face on the project, and he's built something, not taken money for himself, and he's sort of built this really cool thing that people can use. And he's continually improving it, whatever. And I think that once the industry has that level of trust where people that say aren't, crypto degenerates, I think that, you can, and I'll show you this one. I'll bring this over. The new CoinGecko. Have you seen the new CoinGecko degen mode?
No.
Oh, mate, you're in for a treat.
Yeah.
So here, now, CoinGecko, this is sort of like where people have been moving away from CMC. And actually, this is something worth talking about.
Yeah, I use CoinGecko as well.
Yeah. So a lot of people have been moving over to CoinGecko as opposed to CMC. For the pure, I personally think that CoinGecko is a bit better, but also it's not run by this major centralized power being Binance, because everybody knows that CMC got bought out by Binance. Mm-hmm. And I think that also sort of hampered their ability to innovate, but we won't get into that. And I think that it's a really interesting thing about DeFi at the moment, and how the fact that we've now evolved the industry to be far more community focused, which is a very good thing. And this whole idea of doing, $10 million ICOs for, a back of a napkin idea without a white paper, with a light paper, with semi-anonymous founders and blah, blah, blah. That's pretty much done. These kind of projects just won't either get funded anymore, and they pretty much won't get anything done. Like, the idea now is that, number one, you need to build a product first, or at least an MVP, then build a community. And then once you have a community, you can then look at a fundraise. And in many of these projects, a lot of them don't even fundraise. They, like Aleph, for example, majority is community driven. Some would argue that they essentially bought a community with some tokens, which caused some problems down the line. But that's all sorted now. But essentially, they never did a fundraise. They never did an ICO. They never sort of went out to the public and said, "I'll buy our token," or whatever. They built a community first. They got community support. They launched, and then they're doing what they're saying they're doing. So projects like this, I'm a big fan of, because it's sort of like, okay, it's the entrepreneurial thing where, you work out a problem space, you find your ideal customer, you make sure that those customers are experiencing that problem and they want it solved, and they are happy to use your product or try it to solve it, blah, blah, blah. And then you end up with a successful business, as opposed to the idea that a lot of people have is, oh, I had this really cool idea while I was, smoking, a ton of weed the other night, or on mushrooms. I think it's really good. Let's go raise $1 million and see if it'll work, or 10 million or 50 million. Uniswap is another example of projects that have done the right thing. When Hayden first started Uniswap, he only got, I think, about $100,000 in grants from the Ethereum Foundation. But even before he got those grants, he was still building the product. And then he got, obviously, encouragement from Vitalik, and there's a whole story about that on their website. But the point is, they didn't do a massive fundraise and whatever, and they took out Bancor. Well, they're sort of more successful than Bancor, which was a $150 million raise. And Bancor, where are they now? Like, nowhere. So if you invested in that project, it's like, great. And I'd probably say that more people that, if you just use Uniswap, you just got about $2,000 just dropped in your wallet just for using it. And I'd probably say that the haven't got that much value.
You must have seen the comments, right? That some people basically are comparing this airdrop to basically like a token raise, or and it could be basically, these tokens could be considered securities, right? Have you seen those kind of
That would be way too hard to manage. That would be way too hard to prove. So I'm already in degen mode. Just going back to my original point. So this is the farms part of CoinGecko, and this is where you can see farming. This is the DeFi area, and they've done a really, really good job at it. So this is obviously all your DeFi type tokens and what they're worth, and the total DeFi market cap is still only 14 billion compared to Ethereum, which is 43 billion. We're sort of seeing, DeFi, only 4% of the entire crypto market is DeFi. And this is where all the attention is at the moment. It's like, why is this a thing? And then obviously there's so many other projects that can catch up to Chainlink. And Chainlink is sort of, 26% of dominance as being the number one project at 800 million. So, sorry, yeah, 4 billion. I'm retarded. Anyway, so going to this farms thing. So this is where you can actually see how people are earning money. What kind of return ROIs you can get on, and these are seen as being reasonably stable. These are sort of, this is the kind of returns you can get on some of these products. So, for example, pickle. I don't know how good pickle's going to be. Pickle's still very new. But as soon as I haven't really followed it, to be honest, because I'm not a real big yield farmer. But Yearn's value on their balancer pool is returning 2,000%, and that's a reasonably stable project. Anyway, so these are your more normal farms, and then when you want to go degen mode, so we've got a Chad Gecko here, only 1,000% returns, and these are the ones that are a bit, like it says here, protocols and contracts may be unaudited. Only 1,000% APY farms are shown. There will be exposure to smart contract and market risk. So the idea in something like this is you get involved with 5 of them, and then maybe one might rug pull, but then the rest may not be too bad. So we're seeing some insane yields in some of these projects.
So how do you exactly use this chart? What do you look for first? For instance, just you're
looking at projects. So by the way, I will note that YFV value is, I'd probably say, one of those ones that I wouldn't touch. It's not Wi-Fi. It's a Wi-Fi clone, and that's why the yield is so high. So some of these really high yield projects, it's really about keeping up to date with the project and seeing how much. It's really about seeing how much. Having a look at the community, having a look at their Discord, having a look at their Telegram, seeing if the owners are random cartoon characters or real people. Have they actually audited the contracts? What's the feedback from the community in regards to the protocol? So for example, and I did this in my Sushi Swap video, is in the Discord, the one problem that Sushi Swap had, which is this whole the developer account issue, was brought up like 10 times in their Discord and was always slapped back. It was always like, yeah, it's true, that's how it is, but don't worry, I'm a good guy, I'm not going to do it. And then he went ahead and do it. So if the community is identified, I'd be looking for the community, who would probably be people smarter than me, who can read smart contracts, who will eventually look at this thing and say, hey, I noticed there's this major issue with this particular protocol. It could be a problem. Thankfully, the longer that a project lasts, the less likely it is that it's going to rug pull. However, the longer it lasts, the lower the APY gets. And this is what I mean. If you are a high risk taker and you just stuff it, I'm going to get in, I'm going to farm this for 24 hours and get the hell out, you can actually make good money. And it's really, and I said this in another video of mine, it's really like playing a game of chicken. It's like, can I make my money and get out of this market before the founder rug pulls? Who's gonna get out first with their money? And the issue with these is that you might be looking, in this case, at an 8, nearly 9,000% yearly, 1% hourly return. However, there is a really, really big risk that this product may fail. Like the Universal Liquidity Union, no idea.
How is that? Yeah, it'd be good to basically add a couple more indicators, like things like, founding team background, contract audited, and stuff like that, right? And then that will provide a little bit more legitimacy to the actual projects themselves.
Yeah, and I'm sure someone will develop something like that. But if you want to be a complete degenerate, that's not a problem for you. So look, but you're having a look at all of these, and all the guys that are giving the highest amount of yield, they always have some level of, there's some part of the project that is like, oh, I don't know about that. Like, I don't know who YFFC is. I don't know who Ulu is. But essentially, obviously, it's had one audit. Here we go. It says that he audits one. So, this one might not be too bad. And then, no audit on Katana, no audit on YFFC. So, it might not be an ideal option. Sashimi, yet again, no audit. And then you've got, KSC and YF Value. Now, YFV is one of the, I know that's still another YFI clone, but I think this one's been around for a little bit longer. But yet again, we're seeing all these projects with only one audit. Yeah. And then, and these are the Arcadia group of the guys doing all these audits. Yet again, none of this stuff here is audited, including here, you can see Pickle isn't audited. When you're looking at this stuff, you want to make sure that there's at least some kind of audit going on. But very few of them. But that's where it's the risk versus reward. High risk, high reward. You can make a lot of money, or you can get absolutely slammed. The positive as well is that gas has gone down. I mean, I remember when I claimed and I'm pretty sure it was the same for you, Peter, when I claimed my tokens yesterday, my numerous wallets of tokens. I think I was paying about $35 per wallet in fees just to get the tokens out. Whereas if I would have just waited, it'd be a fraction of that now. Because I think I paid I was at 650 or 700 Gwei. So it's sort of down to 161. So it's pretty insane.
Yeah, so I did a transaction earlier today actually, and I only paid $7. Which is funny, right? Because we consider like $7 is actually quite cheap compared to the last couple of weeks, but it's still
stupidly expensive. I mean, and I think this is the other thing that is preventing growth in the industry, is that we're still in this state where we're so reliant on only Ethereum that we sort of have, like, we're still so reliant on Ethereum and it's the only shop we can go to at the moment. That for us, at the end of the day, if you've been making decent returns and that there's a high likelihood that if you get into something, you're going to be able to at least 4x it or 5x it within a week, and we're still in that space, who gives a shit about a $30 transaction fee? Like, who really cares? Whereas for someone who is new or has never seen this before, or you're used to the normal stock market where, in the case of something like Robinhood, you pay no commission, or eToro, you don't pay commission, or, a lot of these brokers charge very small multiples. To pay $7 or $8 for a transaction, unless you're paying with big money, like 10 grand, 10 grand into a position, which actually for a lot of people is not a lot of money. But if you're starting out, you're not going to be dumping 10K into a project initially. You're going to be dumping a lot less. So I think that for your more experienced guys, it's not a big deal because, you can make that money back. But I think for attracting new people to the market, it is a barrier to entry. And I think that's going to be the case for, a while, where at the moment, because Ethereum is just blocked now, there are other blockchains that are coming out. There are other chains that are opening, like, we've got Polkadot and PokerSwap coming up soon. I know that there's a few protocols that are listing on Stellar, which of course is super fast and super cheap. Because Stellar, for those of you who don't know, was originally made for ICO projects. So Stellar's starting to come out with a few projects. There's one called MobiPay that's coming out, I think, in October. And that's going to be a project that's going to be listed on XLM. So, I mean, it is good to see that we're having a bit of diversity in regards to the chains that people use. But then that's also going to require people to skill up because, I mean, personally, I've never used a Stellar wallet before. I've actually never done a transaction on Stellar. So, it's really about, okay, well, how many people are really going to be willing to pick that skill up? And most people, I think, that are using Uniswap will have the mental capacity to pick up how to use Stellar. So, yeah.
So that's a great question, because we know that these ETH2 alternatives are basically in development right now, and they're basically ready to launch. And it's just a matter of time, basically, before they do come out, right? And the good question is, like, what will it be that helps users to transition to the new platforms? And like you mentioned, right, UI is going to be like one of the key parts where you've been so used to like signing transactions with MetaMask, like you basically became a robot. Like if you don't sign the same way, you might think it's like it doesn't feel secure anymore, right?
Mm.
And the other thing is like like speed and what else, like familiarity, right? And it's got to, and it's still got to give you that level of security when you transition.
And the thing that a lot of these DeFi projects rely on is number of users. I mean, obviously the reason why the Ethereum chain has been so popular is because there's so many people who have Ethereum wallets and know how to use Ethereum. Sorry. Oh, I think I had the worst night's sleep last night that I've had.
What I'm wondering as well, right? So I'm wondering if are the dApps going to fully move over to like these new chains, or do you think they're going to do some?
There are some obviously cross-chain solutions. There are some solutions that offer go cross-chain, so things like obviously Chainlink, Aleph. There's a few of these protocols here that operate, across multiple chains. So that won't be the issue. The issue is going to be users. So I remember, even Tether now is interoperable. I mean, there's Tether contracts on multiple chains now.
Right.
I think there's I think Tether now operates on like 5 or 6 different chains, including the Binance chain. What is it? They operate on, I can get that up now actually, but they operate a number of chains, and that's to alleviate the pressure. I don't know what I'm going to get when I Google Tether chains, but here you go. Tether is on the Omni, Ethereum, Tron, EOS, and Liquid blockchains. And I think they're on the. I think they're also on the. I think they're on the. This is an old. This is an old site though. No, I'm not going to go do whatever that was. So yeah, it is an old site. So there's a. I think it's now on Binance chain as well, because I have seen the BEP, or whatever they're called, tokens. So there's. And of course, I'm looking up. Tether.io. So yeah, I think there's part of it is that. No, this isn't it. Okay, I'll have to look at it later. Sorry, I should have had that ready. But essentially, with yeah. So sorry, Peter, you might want to bring up something else while I'm looking at this, because I'm not going to be able to think unless I bring it up.
Yeah, sure. Well, actually, because we switched around the agenda today, right? So I've actually got a couple of slides that I can share in the meantime. So
Yeah,
what I'll do is I'll put up my screen as well.
Oh, it's tether.to. Silly me.
And what's that? What's tether.to?
It's Tether's website.
Oh, right. Okay.
Oh, it's on Solana. It's on Solana. So it's on the Solana chain, and then what else? It's on a few other things. Why is Tether? I just want to see. I'm just trying to see what they're on. I just want to see what chains they're on.
Yeah. I mean, it's
Tron,
key, these guys.
Omni, Blockchain. There are a bunch of different things. So there's a number of different. They're on a number of different chains, and you can swap them in between the different chains. And I think that's the first step, is that you're going to start to see these projects needing to sort of run on these different chains, because obviously we've all learned that reliance on Ethereum isn't necessarily a good thing. However, what is needed then is the developers, and that's the one thing that Ethereum has, is the developers. So you need to have developers who are willing to build products on these side chains. And the big risk is for these products is that they'll develop on this side chain, they'll put all this effort into developing on that technology, and then none of the users come across to use it. I think at the moment there will be enough users who have not been happy with the way that, say, Ethereum has worked, that will be willing to jump across. So long as there is enough of a way to, so long as it's easy enough to jump from the Ethereum world into, say, the Stellar world, or Polkadot or whatever, as long as it's easy enough to do, to sort of build bridges to move funds or move token value in between chains, I think that initially there will be a lot of money made by the people that take the chance. Yet again, risk versus reward. And then if that works out well and people make all this money, then you'll see other people starting to do it. So it really depends on how many early adopters are going to really have the balls to take the risk and put their money over there. But I think it's part of the technology that has to happen. It's part of the evolution of what we're in that has to happen. But unless Ethereum manages to pull something out of the woodworks as an upgrade in the next little while, that's going to see gas fees at under $1, transaction fees under $1. I can't see it.
So I'm thinking, for the user anyway, they're not really going to see physically any differences probably, because right now the way that the user interacts with most blockchain apps is usually through a website, right? So the website, whatever powers the back end of the website, is usually invisible anyway. So if you go to something like a Uniswap, right, whether a Uniswap is powered by Tron or whether it's powered by Ethereum, right, it's no different to the user really, other than basically what other apps you need to use to to interoperate with that. So like if MetaMask doesn't work with a Tron decentralized exchange, and now we need to use another wallet, then that becomes a hassle.
Yeah, that's true. So there is, I'm trying to find it now. There is a swapping service. I'm just looking at Aleph because I know that they do it. And that Aleph do a chain. Where the hell is it? Aleph do a way that you can just simply, and I have screenshots of it, but I haven't got the actual website here. And it's going to be, it could be.
I feel like we need to do another whole session on Uni and the airdrop of Uni, because I found the Uni airdrop was so interesting. Like in terms of like, what was the purpose? Was it purely for, was it acquisition? Like, were they purely doing it as an acquisition move? Why particularly at this time, and why like such large values, right? I mean, like they could have just dropped us like $100 and we'd been happy with that. But like, over $1,000 is just
I don't honestly think they would have been thinking that it would have been that amount of money. I don't think that people would have. I don't think that people saw. I don't think that they assumed that it would be worth that much money in the onset. And it could have a part of it could have also been that if they, that they probably wanted to strike that balance between something of value versus, put it this way, the more expensive that it came out at, the more people that were going to dump it. So it would have been easier for people who wanted to collect those tokens to convince people to sell if it's worth $1,200. So, for example, if you're in the Philippines, Indonesia, less as much so, but also Malaysia, countries where the US dollar, where $1,200 can pretty much do a lot for your life. I mean, in the Philippines, that'd be in some cases if you worked in a what's it called, a BDO,
a BPO, yeah.
BPO. If you work in a BPO, I mean that's 2 months' wages like that. Boom. So I've seen a lot of those
stories. I've seen a lot of those stories, and I'm actually wondering if I wonder if those people actually paid the gas, to be able to actually claim it and to convert it. Because at the time when everyone was claiming, you probably had to pay like $50 for a transaction, and you had to pay 2 transactions, right? You had to claim it.
Then it was 70 to sell, but I still haven't sold, so I don't know. I don't even know what it's at now, to be honest. Let's have a look. I don't know if it'll be on here yet, but let's have a look. Uni.
And Alex here calls it Jelly Swap.
Okay, we're on a weekly here, so that's not going to work for us. I'll have to go to an hourly. 7:09. There you go. Still going. So I think that there's going to be a lot of people who would have sold, whether they paid for it or not. But I think that that's what that would have been the plan. Essentially, if it was worth $10 when it came out, people would have left it at the bottom of their wallet and it would have sat there for the next 5 years. Coming out at that amount of money, meant that people would liquidate, and we've seen sort of maybe a little bit of regret in what people would have been thinking when they sold that at that money. It was free money, and if you're selling it between $3 to $4, which I'll be honest, I think that's where a lot of people would have been selling, because a lot of people would have just been like, I just got a free $1,200 to $1,500 US, like I'm out, like get me the hell out. I want to get my money and put it on the sidelines, which is that's not an irresponsible thing to do. That's incredibly responsible. But I think that the reason why it listed at those prices and the reason for the amounts is that, you've only really got 250,000 users. And assuming that all those tokens can actually be claimed. They did say that, for example, Nomi Chef's wallets, the sushi wallets, because they're all locked up, they can't be claimed. So it's like 150,000 tokens that are basically just gone. And so there's a whole bunch of other things like that. And I think that I think that's even then the value of these, a lot of these tokens aren't going to be able to be claimed. Either they're wallets that have been compromised, or people have just lost the keys, or the usual things that happens to some wallets. So, and then there's also people that might have left the industry, and they would be eligible to claim, but they just haven't. So obviously, or maybe they just don't know about it, and they and because in the way that news cycles work, if you weren't on top of this now, it's not going to be news in a year's time. So if you sort of unless they keep doing the thing where it's like you've got 400 tokens to claim up here or whatever, who knows? But
so another interesting part, Luke. Okay, so I'm actually not going to bring up. I'm not going to put up the slides anymore because I just find the uni topic so interesting, right? But I was reading some articles about like who were the main guys that got rewarded from this airdrop. If you have a look at it, right, the main users of like MetaMask wallets, like Ponzi schemes, casino sites, betting sites. There's a porn site out there. It's so funny, man. And like the sushi swap guy, I think the sushi swap guys like made a killing off that as well.
Yeah, right? A killing.
Yeah,
because if you provide, I was providing liquidity for a while for a few things, and I got much. You end up getting much more. And there's guys that made hundreds of thousands of tokens because they've been providing liquidity for so long. And so there's benefit. it is, but that's the way it should have been. Like you should have got a reasonable amount of benefit for participating. And I think that honestly, I got a lot more than I thought I probably deserved for providing liquidity. So it shows you how much they rewarded people for providing liquidity. So, and also depends on the pool you're in and all that kind of stuff. So I think that it's an interesting one. I wish I was providing liquidity for twice the amount of time that I was. I'd be very happy. But it was, I think this was a reasonably fair launch, a reasonably fair way to distribute tokens. But and I also think that strategically, the price point that people were given, the community was given, means that you have bought the loyalty of every single user. I'd probably say that people will not use SushiSwap if they aren't already a SushiSwap person anymore. If you're in Uniswap, you're not leaving. Like you're done. You're staying there forever. You've just made 250,000 super sticky customers that will stick with you. But then you've also given them enough incentive to sell so that the people who really want to maintain control of the network can buy up as many as they can as quickly as possible. And that, I think, is the reason why the price will continue to rise, because obviously the majority of your Mayo hands have sold, and I think there's probably a couple more left. I'll be honest, I reckon $10 is going to see the biggest selling action that we've seen in this thing in the past few days. I think there'll be more sell action at $10. I reckon a lot of people are just going to be like, that's a very, very, from a mental space, that's going to be a very, very strong milestone that people will want to sell at. So that's just something to be wary of if you're still holding. However, I mean, I think it is inevitable that it hits it, just from the pure nature that it's the biggest, most used product on the market, and it's only $1 billion market cap. And I mean, this is literally, I mean, Uniswap is literally the most used platform by far. Locked USD value $1.8 billion. So we're talking serious coin there. And if we look at, I mean, just the market cap of something like Aave, which has less locked value and probably not as much utility because it's only a lending platform. Aave has a market cap of 770 million. So I mean, I can probably say Uniswap has probably 10 times as many users as Aave as well.
Have you looked into their revenue model at all? I mean, because I saw some comments going around that Uniswap doesn't really charge many fees for trading, right? Because
it doesn't charge. All the fees go to the liquidity providers.
Right. So I mean, how does Uniswap itself then make cash off all the value that's locked up in there? I mean, now it'll be obviously through their token, but
that's why they were getting VC funding. And it's the same thing. It's like some of these products won't make money for the first few years because they're going for growth. And then once they've got growth, then they can start to look at ways to monetize. But at the moment, I don't think Uniswap makes money for themselves. So that's why they went and got VC funds. That's why they had the $100,000 from the Ethereum Foundation. But all fees go to liquidity providers.
So when you're valuing the company itself, right? You don't look at basically the revenue model at all. You're looking at purely growth metrics.
Right? Look, it's still crypto, mate. Revenue is in tech as well. You've got to understand as well that revenue is secondary to growth. For example, Apple and Google. I don't know if they've ever paid a dividend. Maybe Apple might have in the past 30 years, but I'm pretty sure Google hasn't. And so, what's the difference if you're not getting dividends? What is the real difference between a governance token and a stock? Like at the end of the day, I mean, you're right for being a shareholder is that you can vote on directors, and in crypto with a governance token, you can if you have enough tokens, you can submit a proposal. And if you have enough, and then if you have any tokens, you can vote on a proposal directly. There's no need for a board of directors.
These governance tokens don't necessarily reflect the intrinsic value of the actual company itself, right?
Sorry?
Whereas, stocks basically reflects the actual, you have a balance sheet, you have P&L, it really reflects financial.
Okay, that's great. But as far as value is concerned, what value do I as an investor? I mean, the idea with stocks originally is that I own stocks so that eventually I'll get a payday, right? Like eventually I'll get something back from the company for my investment that isn't just capital growth, because capital growth is from a fundamental analysis level, most people would look at, say, banking stocks. People look at, say, bank stocks and say, well, if I buy in Australia Commonwealth Bank shares, I'm going to get a 5% dividend a year plus franking credits. Then, if I've got, if I'm going to invest in bonds, I'm only going to get 2%. So, I think that the price of CBA is going to be fairly stable, and their dividends should be fairly stable over the next many years. Therefore, my $100,000 that will earn me a 6% or 5% dividend every year is worth the risk. My risk is worth it. And if the company appreciates in value over the years, my dividends get bigger and bigger and bigger. Like, for example, if you bought, I can't remember when CBA listed, but let's say you bought CBA shares 20 years ago, and then you just bought them at whatever they're worth, probably sub $5, and then you just ate those dividends and reinvested them, you could be earning your initial investment again every year in dividends 20 years down the track. Whereas what's happened now with the rise of tech and all that kind of stuff, and the fact that a lot of these companies don't pay dividends, is that it's all about growth. Now, sure, you can measure the value of the company through things like, the balance sheet and how much of a share of your business is worth and all that kind of stuff. But, if you're with a house, right? If you own a home, you've got physical land, And there's reasons why that becomes more scarce and why, the house in the right area, more people are going to buy it, all those kind of things, if you understand those metrics. But you also get cash out of rent if you're renting it out. So you're actually getting some kind of return for your investment. In a lot of these tech stocks at the moment, all you're getting is growth, but no dividend. And then it's like, well, if they're not paying a dividend, how do you then justify value outside of just that someone else is prepared to pay more for this thing as opposed to what I paid for it? Like if there's no yield, there's no real value. Whereas something like sushi, the reason why that's so interesting as a token model is that there is yield from just passively holding the token. And then you can acquire more tokens by participating. Whereas, I don't think that Apple has given out a single Apple share to someone who has bought an Apple product or used an Apple product. I don't think that anyone's got a share from doing that. And the big difference with the DeFi space at the moment is that you can participate in the growth of a business by using the product.
Hey, so Jason brought up that question I mentioned earlier, and he's asking again, do you think governance tokens infringe securities laws? He's wanting your opinion on that.
I think that's a hornet's nest. No, I mean, the reason why it doesn't infringe on securities laws at the moment is because the main thing that people talk about with specifically security tokens is the Howey test. I hope I'm saying that properly, otherwise I'll look like an idiot, but I'm probably saying a lot of things not. Is the Howey test, which is the idea that the business and the investor are in joint profit together. Now, that's different to say that I'm a degenerate, I'm going to buy this at $1 and sell it at $100. That's different because you're not in joint profit with the business. The business isn't entering into an agreement with you that says, if you give me $1, I'm going to give you a return in a year of $100. That's not what any of these companies do. Whereas if it's sort of like, if you enter into a system where, you invest in a company and they say, we will give you 50 cents of every single, we'll give you 0.05% of every transaction we earn. And then it's like, okay, well, I get value from that, right? Like I get value because I'm holding this thing and the company's doing work and I'm getting a share of their actual profit. I'm participating in the actual revenue stream of this business by holding a token. That's where it gets complicated. Now, I think the way that a lot of DeFi projects get around that is, number one, because regulators are slow at the moment and they wouldn't really be able to have any jurisdiction. I mean, it's going to be really tough for a US regulator to try to shut down something like Uniswap or SushiSwap because it's a decentralized product. I mean, you can't do it. Who are you going to send your legal letters to? In the case of SushiSwap, who are you going to send your cease and desist letter to? No one.
Uniswap is licensed in New York, apparently.
Yes. But I was talking more about SushiSwap in that case, because SushiSwap actually does give you return for your token. But then the other question that then comes up is how do you determine a return? I mean, you would have to recognize tokens as being legal currency in order to assume that you're getting a return. Like you are literally, in the case of SushiSwap, you're getting a return in sushi tokens. So it's like I'm participating in the growth of magic internet money, and who determines the price of magic internet money is complete degenerates on the internet. So, I mean, I think that even if you were to get kind of, the SEC breathing down your neck, I mean, and they could potentially shut it down. But even if they shut down Uniswap, I mean, you could just move it somewhere else. But I think that, and all that the SEC can do is say we won't let you transact with US investors. But then it's like, how do you stop them if it's on the Ethereum blockchain? It's really tough.
I mean, so basically, there is no legal entity, right, for any of these, like especially these yield farming kind of like tokens, right? There's no central legal entity that can be held accountable.
It's all smart contracts on a website. The only way you could track them down is sort of the same way that the conspiracy theory about Bang Protocol and Sushi started, was by tracking down the domain, whoever registered the domain and however they paid for it. But if you're reasonably good and you're not charging, lights a bit bright. Oh, that's better. If you're reasonably good and you're doing it all, pseudonymously or whatever, then they can't track who you are. And it's going to be pretty tough. I mean, specifically speaking about SushiSwap, there's no way, you've got an anonymous founder and no one knows who he really is. You've got, a completely decentralized project that runs on a blockchain. And it's the same, but I mean, for better or worse, I mean, you could say, okay, well, that's a good thing for Sushi Swap, but it also works negative in the other way. Like you've got projects that I think I talk about every week, which is like Forsage, which cannot be stopped despite how bullshit it is. And if you're in it, you're a bad person. And if you get other people in it, you're an even worse person. Don't get involved in Forsage. So it's the problem is you've got projects like that are, I wouldn't say 100% scams, but MLMs on the blockchain that you can't physically shut down. And if they've got enough money behind their marketing and they get enough, silly people involved, or they sucker enough people in, there's no stopping it. And that's a negative of it. So it's a two-sided thing. Good projects and good things, regulators, they're immune to regulators. But then on the flip side, so are the bad ones. So the rug pulls like hot dog finance, noodle finance, God, there were so many food tokens. And those, all those projects, I mean, there's no one to prosecute and there's nothing a regulator can do about it.
Man, that's a super fascinating point. I mean, like governance is another whole, like we could do another whole session on that. And I know some people that work in that space and, I know that like the way that they see it is that they see that because the advances are so fast, it basically needs to self-regulate. So in a way, like the actual industry itself needs to hold itself accountable. So whenever you see like scams coming out, people got to call that out. And people have got to actually take action on that. And you can't let people like rug pull and then just run away with like $14 million kind of thing. There needs to be basically accountability from the community itself.
Yes, I don't know if you can hear that. One of my cats is currently yowling about something. I've got to go deal with that. I think he's seen another cat outside and he's going mental about it. I've got to go deal. That's cool. But yeah. So let's put down some items that we need to cover for next time. And I'm going to go rescue a cat because it is just after 11.
Yeah, cool. All right, mate.
See you, dude.
Have a good one. See you next time.
Bye.
See you guys. Bye.